Hello everyone and welcome to Day Trader S&P 500. Today is April 11th, 2024. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. Let's get our YouTube subscribers caught up with our newsletter subscribers. Let's start with the US 10-year. We're looking at a daily chart of the US 10-year, and as you can see here, the end of the 39-year bear market and interest rates from the 1981 high, the 30-year was 18.45% then, ended at the pandemic low in March of 2020. From there, we had wave 1 up with a circle, wave 2 down with a circle, wave 3 up with a circle, wave 4 down with a circle, wave 5 up to complete the larger degree wave 1, which was a direct hit to within 1,000th of a point of our target on the way up. Okay, that was wave 1. Okay, then we got wave 2, and let me just fix this all here. There we go. Let's make that a little better. Squeeze it all in here. Bear with me while I get this chart, and let's move this out of the way. Okay, so from there we had an A down, B up, C down for wave 2. There it is there at 3.253%. By the way, the wave 1 target was 4.335. That was the actual. Okay, and from there we've got a 1, 2, 3, 4. This is a little bit crowded here, and let's move this guy out. There we go. You gotta adjust these for the screen. Okay, we had a 1 up, 2 down, 3 up. That was an upside trigger. 4 down. Once it passed the wave 3, we would get a wave 5. There was the wave 5 target, 5.10%. Actual was 5.021 on October 23rd, 2023. It obviously, excuse me, coincides with the stock market low on the, I think, the exact same date. That was one of the larger degree wave 3. Here is wave 2 at 3.783. And then we have another trigger. We had an A down. It might be hard to see here. There's that A B up, and a C down. So once this move crossed the A wave low, that's our upside trigger. We've got a 1 down, a 2 up. Here was our 3 targets. And this may have to be updated. This is as of yesterday. Let's see what that is. That's a 4.568. Yeah. And this one's a 4 point. Yeah, let's update that right now. Settings is a 4 point and counting 568, and we'll make that 411. Here we go. Might go higher. So these were our targets, and it's already surpassed our 1.618. So this thing is zooming in a third of third wave. There's 1 up, 2 down. This is 3, as you can see there. There's our trigger. It was activated. There's another trigger. This first trigger, I'm going to get these guys all lined up here, gives us a target of 5.551%. And in the larger degree of trend, this wave 1 here, this wave 2 down here at 3.253. Wave 3 at cycle degree gains equality with 1 at 7.255%. And that's the minimum target. Okay, I know the everybody on TV at the beginning of the year was talking about 6, possibly 7 rate cuts. Then after the January and February CPI, PPI, it was 3. Now after yesterday, they're talking about 1 to 2. We've been saying all along for years that rates are going up. There's no more cuts after this low. Okay, the Fed follows the market. They don't lead. They're useless. As these rates go up, you'll see the Fed raising rates to keep up. Okay, our triggers and targets have served us well, and our Woodson Wave Report newsletter subscribers, not only were not whipsawed and not surprised, but they're on the right side of this move. Okay, we're in a third wave up. The interest rates are going up, not down. There's not going to be any cuts anytime soon. Actually, rates are going up, and we believe, since this was a 39-year bear market in interest rates from 1981 to 2020, the year 2020, this could possibly be a 39 or 40 year bull market. So we're only 4 years into a 40-year bull market in rates. Long way to go as far as time goes and interest rates, okay? So we'll see how this plays out, but so far so good on the right side of this move for years, okay? There's our trigger, there's our next trigger, okay? So, and we'll update these targets and get that out to the annual subscribers to the newsletter, okay? So let's go here and just show you guys real quick the subscriptions. Let's see, I think we'll get it here on the old register. Yeah, here we go. That's the bonds are covered in the annual subscription, which is here. Okay, it covers all that, and the monthly is what we do with the ES. It's weird because the monthly subscription reports are issued daily, and on the annual subscription reports are issued monthly. But we have a lot of interim reports along the way, so I think we average about 4 to 6 a month on the annual. Anyway, so much for that. Let's get into the ES. Okay, we'll see where this goes. 5.551 is our next target for that wave 3 of that degree here. Okay, let's get into the ES. I think it's right here. Here's an hourly chart. Okay, let's make this full screen. There we go. There was the wave 4 low. Okay, in red we had a 1 up, 2 down, 3 up, 4 down. There's our fourth wave triangle. We love identifying triangles. Okay, and then we've got 5 up here, complete 5 at 1, 2, 3, 4 degrees of trend, if that is correct. From that high we have a 1 down right here at 52.35, a 2 up at 53.08.50, and 3 down is in progress, and you can see our targets here. Okay, and so far the low is 51.76 down here. Okay, and you'll notice the ABC, that's the alternate count. If this does not play out, this signal for a change in trend is the farthest one that we've seen go along since the October low. It still has not quite played out all the way. Here's first trigger activated, second trigger activated, third trigger's down here. If this 50-60 low is surpassed to the downside, then it means that the market is erasing or correcting more than this 5-wave decline from the 50-60 low to the 53.33. That would be that signal for a change in trend. You can see our 3 targets. I put the 2.618 because if this plays out, this would be a wave 3 of 3 at 2 degrees of trend. Should be the strongest and most powerful. Should at least attain a 1.618, possibly a 2.618. Where is it wrong? We always ask ourselves that when we make a chart or make a trade. A move above 53.0850, the wave too high, as second waves cannot retrace more than 100% of the first waves, would be the first signal, and the ultimate one would be obviously a move above 53.33. We'll see how this plays out. So far so good. Let's get to our report that we put out yesterday at the market close. Pretty much the same thing, but by the way, these triggers and targets from the most recent to the first one, these were the upside targets to that 53.33 high, with $50 per contract in futures. It's an 80-point gain from the most recent one, and the most recent one should fail when their trend reverses. But you can see there the triggers and targets, the point gains, and the profit per contract. Okay, profit per contract goes all the way back to our first upside signal, which was activated 3 days after the low. That one has provided a huge amount. Okay, if you added a contract at each one of these positions, starting here, then add one on 119, then add one on 222, then add one on 37, okay, and then add one on 320. That was our last upside trigger. You would have a total of 108, 162, in profit, adding one contract to each upside trigger. So needless to say, our subscribers are doing quite well. There's a Fibonacci time spiral. Here is that same E-mini futures hourly chart. Let me see if I can get that a little bit. There we go. And that's where 2 of our 3 downside triggers have been achieved. This one will clinch it. And as far as wave, here's those triggers there. That's the low so far. There's the second one that was activated yesterday. Here is the third one that is not yet activated. Okay, where is the potential change in trend negated or wrong? And is that wave too high there, followed by a move above the all-time high? That would negate it and put that alternate count in play, which is blue, which is that one, A, B, C. That's why this low being taken out is important. Okay, let's see what else we have here. Here's a change in trend. We want to see 5 waves down. We got it at the wave 1 low at 52.35. You'll see that I'm going pretty fast here, aren't I? There we go. Right there. Okay, that's the first signal achieved. All right, and then we go down to here. Second signal is 3 waves up to a lower high in wave 2, which we have right there, 53.0850. Okay, that becomes our make or break, or where is it wrong? All right, and then the third one, which was achieved or is being achieved, it's in progress, is wave 3 down to a lower low. Okay, and we have that in progress now. There's 1 down, there's 2 up, and here's our wave 3 targets. Okay, ideally this goes at least to the 1618, if not the 2618. We'll see how that plays out. That's not all of it. Okay, there's still a couple more there. Okay, we would need to see a 4 up, hold below the wave 1 low, right there, and then we need to see 5 down, and that'll do it. If we get all of those, then this 50-60 low would most likely be taken out, if not by the wave 3 with the parentheses. You can see the 2.618 is right below it. Okay, if not by that third wave with a parentheses around it, but by the 5th wave, which is that last signal. So that's what we're looking at. We've been watching for a change in trend virtually every day to our newsletter subscribers since October. We've had a couple that have played out and achieved 1 or 2 of these steps here, if you will, and the third step, it usually fails. So we're in that third step now. So far, so good. So we'll see how that plays out. Got the PPI today. We'll see if that follows the trend on the treasuries. Actually, let's go to the treasuries there. There we go. We'll see how this plays out. I'll update this and get that out to the monthly or the newsletter subscribers. Bonds are covered in the annual, and then we'll see. We'll see if this thing zooms up toward that 5.551. But the direction is up in rates, not down, and it's been up since April of 2023. Actually, and then it's up since December of 2023, because we had that 1 up, 2 down. Okay, that's it for this time, and until next time, take care, everyone.